We just want to welcome everybody here this evening. For those of you that don't know me, my name is Jeff Letts. I'm the co-CEO of Genistar. Genistar is the company that is hosting this here this evening. And we'll tell you a little bit more about the company, but we're a financial education company. And our focus really is on helping to empower people to make the right financial decisions. Isn't it amazing? In school, we go through 14,000 hours of education before we ever even go on to university. And they don't teach us anything about money. They teach us how to dissect a frog or algebra. And if you're an architect or an engineer, that might be helpful. But personally, I've never used algebra since I left school. And so, really what we're all about is helping to empower people to make the right financial decisions. So just kind of sit back. I hope you've got a notebook out. This is being recorded, so we'll also be sending this out to everybody that's registered for the seminar, so you can go back through it again, share it with your family and friends. And this is the first of what I believe is going to be many podcast or educational courses that we're going to be putting on for the public to really help empower people. So, George, if we could go to our very first slide. I know that George Jenkins is going to be helping us here this evening. So the seminar is called Fear to Freedom, Conquering Mortgage Worries. And your guest speakers tonight, I'll be introducing to you Taj Kang, Senior Mortgage Consultant with Smarter Finance. Taj is just an incredible guy. We partnered with him a couple of years ago, and he's going to really be taking the bulk of the seminar tonight. And then Steve Jenkins, one of our founders of Genistar, also Senior National Sales Director, and then myself. I've been in the financial services business for 47 years. Hard to believe that. And started when I was 19 years old. And I got to tell you, I fell in love with this business because it's a never-ending learning process. And I love the financial world. I love how it can help people whenever they're empowered to be able to make the right financial decisions. Let's go to the next slide. And so tonight, we're going to be sharing with you a partnership that we have. We believe in partnership. We believe in teamwork. You can't be everything to everybody. And Genistar, our tagline is financial freedom for all. And we partnered a few years ago with Smarter Finance. And I believe that you guys are going to not only get a lot out of tonight, a lot out of this seminar, but also you're going to be able to, if you want to, be able to talk with the Smarter Finance people. Let's go to the next slide. So who is Genistar, and a little bit about us, a little bit of an introduction. Genistar, we provide free financial education for individuals and families, and we've partnered with experts in the financial arena who complement their service. We're a little bit like a GP in that, we're a general practitioner, but when it comes to specialist areas like mortgages, like property, like investments, wills and trusts, we have partners that we work with that are specialists in their field. And so I'm very excited tonight that Smarter Finance are partners of Genistar. They're an independent mortgage broker with access to the market for residential, buy-to-let mortgages, commercial mortgages, and that's really what they solely focus on, and they truly are experts. And Genistar and Smarter Finance has been working together to ensure that clients get the best possible outcome with their finances. And what I love about Taj is that he's got a heart to really help people. He doesn't personally come from a background of wealth. He knows what it's like to be out there struggling as a middle-income person, and trying to figure out this whole financial world. And he has really just got a real heart for people and a heart to go and do the right thing 100% of the time. So if we can go to the next slide, I'd like to introduce Taj King. And Taj, thank you so much for taking time out of your busy schedule to not only put together the seminar, but then to present it live to us tonight. So Taj, thank you. I'm going to turn the seminar over to you, and I'll be back. I mean, I'm on here listening, but I'll be back after you're done with your part.
Thank you very much, Jeff. Thank you for that great introduction. Good evening, everybody. Thank you for giving up your time this evening to listen to what I hope will be an informative session and give you an opportunity to put a bit more control around your finances, particularly with the mortgage. So like Jeff said, we are partners of Genistar. We are independent mortgage brokers, and we have access to the market when it comes to mortgage options. So I just want to cover 4 key aims for the session this evening, just so you know what we're about to talk about. So the first thing is to really try to make sense of what's happening with the mortgages and the mortgage market today. We know they're on the news every day, but it's important to understand the reasons behind why we are where we are. And I'm not going to get political. This is more just understanding the environment and the causes and effects. And then more importantly, what I want to do is to show everybody how to make informed decisions if you are remortgaging. Most of the news is centered around people who are coming off fixed rates that they took 2 years ago or 5 years ago, and the stark choices that they're being faced with. It's all doom and gloom in the news. It's not a pretty picture, but I will show you how you can try to seize a bit of control if you're remortgaging. The third aim is really just to provide you some top tips on how to save money when making any choice about mortgages, regardless of whether you are moving or whether you've got an existing mortgage you are looking to refinance onto a lower deal. So the fourth aim is then just focusing on those people who aren't remortgagers, who are people looking to buy a new home or to buy an investment property as a landlord, and understanding when the right time to buy is, when the financial climate is the way it is. So they are the 4 aims that we will be looking to cover this evening. Next slide, please, George. So let's talk about the mortgage market today, the first one of those sections I mentioned. I'm going to start with UK interest rates. These are the things that are on the news every day. So George, you can just take me on to the next slide. If I can just draw your attention first and foremost to this blue line we have on the right-hand side. So on the left, the numbers that go from 0 up to 6%, that is the Bank of England base rate. The Bank of England base rate is the underlying national interest rate. And this is the thing that has been going up and up. It's reviewed by the Bank of England, who are independent of the Treasury, and they're supposed to be working independently of the government as well. And their key aim is to control interest rates to keep the cost of prices down. The cost of prices is also known as inflation. I'll talk about that more in the next slide. But as you can see from this graph, 2008, so right towards the start of the timeline at the bottom, that covers what used to be a normal market when the credit crisis hit in 2007, 2008. Now, what happened as a reaction from governments is they absolutely slashed interest rates because money wasn't plentiful to borrow. So what they tried to do was to make the money that was there to borrow very, very cheap so that economies kept functioning. And as you've seen, that line has largely flatlined for a period of time. The rates started to go up a little bit in 2018, 2019. But then, as we know, in 2020, we had another unforeseen event, the coronavirus pandemic. And then that again caused governments to react by slashing interest rates to get to 0.1%. So at their height, they were at 5.75 in 2008, and they went down to, in 2020, they went down to 0.1%. The pain that we've all been feeling is what you can see with that huge line going up and up and up, all the way up to 5%. That is where we are today. There are rumours that by the end of the year, we need to be at 6 or 6.5%. So if you think things are bad now, I'm afraid they are going to get worse. So in terms of the interest rate increases, we've just had the 13th consecutive interest rate increase. And the rate is now the highest it's been since April 2008. Next slide, please, George.
By the way, Taj, someone just texted me and asked me if you could turn your camera on so they could see how good looking you really are in real life.
I'd love to, but it says I can't because the host has stopped it. So if you could allow me to do that, I'll be more than happy to show my marvelous features, as you say. Jeff's words, not mine, everyone.
I mean, the picture's good, but you're just better in real life. I think you should be able to do it now. There you go. Hey, voila.
Hopefully you can see me. I can't see myself, which is good.
Yes, sir. We can see you now. Thank you.
Thank you. Okay, so why are rates increasing? Like I said, the Bank of England sets the base rate, and it's got a target to keep inflation, which is the cost of goods and services, to keep that down at 2%. Now, just for context, inflation at the moment is hovering around 8%. So they've got some way to go. It was over 10% just about 3 months ago. So they're trying. Bless them. They don't have many levers to pull, and interest rates is the only one. Therefore, the interest rates have been going up to try to bring inflation down. You don't have to be an economist for this. It's just to help you to understand what's going on. The bank's response, like I said, is to increase the rate when inflation is high. But what that does is it has a knock-on effect, as you can see in that box on the top right, on saving and borrowing rates charged by high street banks. Now, borrowing is directly linked to the Bank of England base rate. But the problem that we've got in the country at the moment is savers are not being given the same sort of rates that are being charged on lending. So lending is high, saving rates are low, so the banks are winning at both ends, I'm afraid. Now, when it comes to interest rates, the knock-on impact is obviously people have to pay more, the monthly payments are higher, and what the Bank of England is trying to do is to make sure people have less money to spend on stuff, as I call it when I'm speaking to my people in the office. So just general going out and spending. They don't want discretionary expenditure to be too high, because when there's more demand for goods and services, inflation stays high as well. So fewer people wanting to buy things should mean that prices rise less quickly, which means inflation should naturally come down. That's what they're trying to do. But like I said to you earlier, the base rate is expected to hit at least 6%. I've had 6.5% in the last 7 days by Christmas. So we've got another 1% to go. So like I said, if you think it's bad now, I'm afraid it will only get worse from here, people. Next slide, please, George. So let's just talk about the numbers of people in the UK that are impacted. So there are 1 million households across Britain who are expected to lose a fifth of their income that comes into the household because of mortgage costs. So if you just think about that number, 1 million households who are going to lose at least a fifth of their disposable income due to mortgage costs and base rate increases. Now, one of the biggest survey companies in the UK, a company called YouGov, they're saying 1 in 3 Britons who own their own homes at the moment with a mortgage are currently struggling. So 1/3 of people are struggling with their mortgages. And out of that 1/3, 9% are finding it very difficult. That means they are bordering on missing mortgage payments month in, month out. When you miss mortgage payments, banks start to think about repossessing the property. So this is a crisis situation for that 9% where they're faced with potentially losing their homes. 800,000 fixed rate mortgages are going to expire by the end of this year. That's a really important number, and I'm going to explain to you why very shortly. And there's a further 1.6 million coming to an end in 2024. So some staggering numbers there. So that's 2.4 million people between now and the end of next year who are going to be coming off their fixed rates. Since December 21, when the rate starts to increase, that will make it 4.4 million people who have come off their fixed rates to be faced by higher rates. Staggering numbers. Next slide, please. Now, why are those numbers important? Well, to explain that, I'm going to show you some more numbers here, so bear with me with this one. On the right-hand side, I've got a table here. It's a graphic from the BBC. It was only put on their website the last week or so. It's really, really important that you understand what these costs mean. So the average mortgage that Smarter Finance arrange is around £200,000. It's just under that. And most of the fixed rates that we arranged 2 years ago were around 2%. Now think about that 2% versus the base rate today of 5%. and lenders have to make a bit of money on top of that as well. So it's actually quite hard to get 5% on a 2-year fixed rate at the moment, virtually impossible. So if you look back to the table, if you look at the yellow band around the 200,000, that whole row in the table, if your mortgage payment was £663 a month at a rate of 2% 2 years ago, if you then go right to the other end of that column where it says 6% at the top, it basically means that your mortgage payment has gone up. It's 223 plus 477. So your mortgage payment would have gone up by £700. And you're not even borrowing any extra money or doing anything with the mortgage term. Just by going from 2% to 6%, it means an extra £700 on your monthly mortgage payment. Now, what I just want you all to do is just take a second to think about what that would do to your household finances. Regardless of whether you're renting, whether you have a mortgage or not, whether you're in a fixed rate or not, just think about the impact of having to find another £700 a month. Some families can do it. Some families would really struggle and they'd have to utilize valuable savings that are there as an emergency fund. Some families just wouldn't be able to cope and they'd be faced with not making mortgage payments. So that is the stark reality faced by a large chunk of that 4.4 million people between 2021 and the end of next year. And that is a 35-year repayment mortgage as well. It's not even a short term. So if people on 25 years, 20 years, the monthly payments will be even higher. Next slide, please. So that's the doom and gloom. That is the stark reality of today's mortgage market and families who are faced with some really tough choices. What I want to do now is talk about a few more positive things that you can do to actually take control of what's going on out there. Next slide, please. So how can we actually empower property owners? So these are the people who are coming off their fixed rates. So the key question here, this is the question we get asked quite a lot at the moment. My fixed rate ends this year. What can I do? People are worried. That's why we get this question. So there's a few steps here. Number one, find your mortgage paperwork, find your original mortgage offer from 2 years ago or 5 years ago or whenever it was that you took your current mortgage, and establish exactly when your mortgage deal is due to come to an end. You would be staggered by the amount of people that speak with me and my colleague in the office when we're asking them this question and they don't know the answer. And some of them don't even get close to the answer. So unless you know how close the problem is to your door, you're not going to be able to do anything about it easily. So find out exactly when your fixed rate expires. It's the exact date. It's not just the month and the year, but the date is really, really important. Speak with somebody independent as soon as possible once you have that date. Until very, very recently, current lenders, so if you have a mortgage right now, your existing lender would only send you an option 3 months before your deal expired, some were even 2 months. The government has now forced them to do things a little bit earlier. We always speak with our clients, our own clients, 6 to 7 months before their deal is due to expire, because any new mortgage offer you get from a lender will be valid for 6 months. So you can secure today's rates. So why wait? And wait until the rates go on. Why don't you do it now and actually get the lowest possible rate that you can? So speak with somebody independent. They'll be able to look at exactly what you have at the moment, which is in point number 3, and compare that to the best deal in the market. So let's see what your lender can do. Let's see who the best is in the market and just make a move. If you're within 6 to 7 months of that deal expiring, make a move towards that best deal. And that's where we help. And like I said, 6 months in point number 4 is the period from which mortgage offers are valid. So there is plenty of time between now and when things go up by another 1%. A good broker will review and secure the best deal that you can get today. And then what we do for our clients where they're doing things early is we will look at how rates are changing. And if something gets better that you can switch to between now and when your current mortgage deal comes to an end, we will draw that to your attention. And if necessary, we can switch to that deal for you. So you're securing the worst case scenario by acting early, and it can get better, but it can't get any worse. So why would you not do it? Point number 6, if your deal is due to end this year, you need to be locking in now. We're already in the middle of July. If your deal finishes in January, you need to be talking about it now. There's a lot of deals that come to the end at the end of January next year. Speak to somebody independent soon and find out exactly when your deal ends. Next slide, please. So another common question that we do get, this is very, very common at the moment, the payments on the best new deals are really high. what are my options? This is what we are suggesting to people at the moment, where their budgets cannot absorb just changing their existing mortgage and just switching onto a new deal. The new deals are higher because of the interest rates, as we mentioned. So the first option that's available to you is, if you have a repayment mortgage, extend the term of the mortgage. One of the positive things that's been happening in the mortgage market over the last couple of years is lenders have understood that people work until later in life. So they don't necessarily retire or choose to retire at state pension age at the age of 67 or 68. A lot of people choose to continue working beyond. There are lenders that will lend a mortgage to you until your 75th birthday. Most of them will go to your 70th, and quite a few will go to your 75th, and there's even a few that will go to your 80th birthday. They will always do a feasibility check as to whether you are able to extend the mortgage term that far. So if you work on scaffolding, they're probably going to find it difficult to believe you can do that at the age of 75. But if you're working, for example, as a nurse for the NHS, they would be happy to extend the mortgage to the age of 75, even though the work is quite physical, you're not having to climb scaffolding. So extend the term of the mortgage and make it more affordable by spreading it out over a longer period of time. The second option, if the first one is still not comfortable, is to switch your mortgage to interest only. You don't do this lightly. There's not lots and lots of options like there are for number one, but there are options out there. So if a repayment mortgage is not affordable at all, we can extend the mortgage term. Sorry, we can change the mortgage repayment method to interest only. Now, we do this quite a bit because it's the only option with people if they're relatively close to retirement already. So you may not have the option to extend the mortgage to your 70th birthday with a material difference on the payments. So this is always an option for those people who are a bit later in life. The third option, and we recommend it to everybody, regardless of where you are, as long as you have the income and the disposable income to do it, make overpayments. If the debt is the thing that's causing your monthly budget to become stretched, reduce your debt wherever you can. So we see people sometimes who've got savings sat in a savings account or in an investment, and it may not be performing as well as they want. Inflation will be eroding it, to be honest. So a lot of people are now thinking, well, the cost of borrowing is really expensive. I'll chip away at the mortgage. Overpayments are a really, really good idea. The final thing is, if none of these things are feasible for you, or if they don't work, the government has brought out a new mortgage charter. They've basically got lots of the big lenders in the UK around the table. They've asked the bigger lenders to sign up to a charter, which basically says, we as a lender are not going to throw the book at you if you're in financial difficulty. We will do what we can to help you. One of the material things that's happened, and one of the key things, is the lenders will not start repossession proceedings until you get to the 12-month point. So that used to be 3 months back in the day when I first qualified as a mortgage advisor. It's been 6 months in recent years. It's now been extended to 12 months for the banks that have signed up to it. Not every lender has signed up to it. That's the thing to bear in mind. One thing that they do have to do is be sympathetic. So if you think you're going to miss a mortgage payment, reach out to your lender and speak with them. If you miss mortgage payments and then reach out to them, the consequences are not good. So this is the final option for people who can't do anything with the first three. Next slide, please. We've been talking a lot about people who've got residential remortgages, so properties that they live in and they have a mortgage on that property. These guys get left behind a little bit. We do a lot of mortgages for landlords, and a lot of them are small landlords, not big professional landlords. We do have those as well, but most of our clients are smaller landlords. Now, one of the common questions we're getting at the moment is, I've got buy-to-let mortgages. What access do I have to new deals? So a lot of lenders, if you have buy-to-let mortgages, they don't let you do rate switches with them directly. They always say, go back to your broker, because they want to make sure that you've got the right advice, and they do that via brokers. So buy-to-let mortgages are harder to obtain than 2 years ago for a wide variety of reasons. The main reason is the interest rates have made the mortgage payments much higher. Buy-to-let mortgage rates are always higher than residential ones anyway. So there are some practical things that landlords can do to make sure they don't fall foul of the market, or it doesn't have as severe an impact as it could. So the first thing is the thing I've already said about anybody who's remortgaging, which is remember the 6-month period to secure a new deal. It applies to buy-to-let too. but the lender will not tell you about it. And a lot of lenders won't let you do a rate switch with them until you're in the 3-month period. So the buy-to-let world is a little bit behind the residential mortgage side. Number 2, you might have to reduce your mortgage to get a reasonable loan-to-value ratio. So the minimum equity amount that's required in buy-to-let mortgages to make it workable these days is 25%. So if you've got a property worth 100,000 that's let out, you would need a minimum of £25,000 worth of equity in that property, which means your debt cannot be higher than 75,000. Now, even that doesn't fit with a lot of situations because it's the rental income that actually determines whether you can get the mortgage at that level or not. So if your rent is really low because you're a really nice landlord, the lender may decide that you can't even borrow 75,000. It could be even less with that example. Now, your current lender should offer you a new deal if you can't remortgage. So the first thing we always do is try to get you the best deal out there in the market. If it doesn't fit due to increasing interest rates and low rents, then we will look back at your current lender and we will see whether they can offer you a competitive deal. Like I said, rising interest rates mean that low rents don't really work. So if you are a landlord and you haven't reviewed your rent for a while, this isn't going to sound too good to those of you who are renting, but I'm afraid it's a reality. Landlords should really review the rent that they're charging to make sure it is a market rent. And if it isn't a market rent, have a conversation with your tenants about what a market rent looks like versus what they're paying. And I'm afraid, with a lot of people, they're going to have to increase the rent. Hopefully you can do it by negotiation and agreement in an amicable way with your tenants. Next slide, please. So, a few tips for you. Next slide. These are things that are in your control. These are home movers and first-time buyers. So we haven't really spoken about these guys too much yet. So what if you've never had a mortgage, and what if you're looking to sell and buy? So there's a lot of people, believe it or not, who are still trying to move at the moment due to things that are beyond their control. But you do have to remember a few key things when you're looking to move home. So number 1, negotiate hard on the price. We are in what is called a buyer's market at the moment, which means you haven't got lots and lots of properties going in excess of the asking price in most areas now. A lot of property prices are being negotiated and they're going for below the asking price. And the reason for that is there aren't as many buyers out there for each seller. So they're getting fewer viewings, fewer interested parties, fewer offers. Remember that when the estate agent is saying to you, oh, we've got 100 people looking to make an offer on this, remember what the market is actually like. Estate agents don't work for you. They are working for the seller. So if you're looking to buy, try to do a bit of due diligence around what the actual price could be, what the price could drop down to in the near future, and then pitch your offer in the right place. We can actually help you to put your offer down as well. If we've agreed your mortgage in principle, we can actually speak with the estate agent on your behalf and basically explain to them what we've done and why we think you're a good buyer. And if they've got no concerns about the finances, one would hope you'd be looked at as quite a good buyer. The second thing that's in your control to make sure the mortgage costs are not out of control is to try to put down a bigger deposit to get better rates. So generally speaking, every 5% that you increase your deposit by, the rates get better and you potentially get more lenders that we can look at for you, which means more choice, which also means lower interest rates. So a bigger deposit is always a good thing if you can do it and if you can afford it. Not easy. We find a lot of first-time buyers at the moment are leaning on family, mum and dad and other family members to supplement their deposits. So they've already been saving hard, but they want to save, they want to put down a bigger deposit. So they use savings of family members who are happy to help. The third point here is to increase your income, to increase affordability. Easier said than done, right? The people who have invited you here today, Genistar, they've actually got a really good way to help you to increase your income. Now, with that income, when it's new income, you'd have to be running it for a while. But once that income has been running alongside your main income for a period of time, we can get it taken into account as part of affordability with lenders. But more important than that, regardless of whether lenders use it or not, you will have more income coming into your household as a result. So speak with your Genistar contact and they will be able to let you know more about that. Cut your spending on discretionary costs. Sounds a bit of an obvious one, right? You would be surprised what we see on bank statements when we're actually arranging mortgages for people, particularly first-time buyers, where there are discretionary expenditures that people have probably forgotten about. We queried a gym membership with a first-time buyer the other day who's spending £120-something for a family membership with David Lloyd Gym. And he said, "Oh, I forgot that was going out," when we queried it with him, because he didn't declare it in his budget planner with us. And he basically said, "I stopped going to the gym about 7 or 8 months ago because work got too busy, but the membership is still being paid for." So things like that, just review your bank statements, go through and work out what you're spending. If you're not using it, get rid of it. And if you are using it, and just give it some thought. Am I going to be spending on this when I've got a big mortgage? Lenders will look at your last 3 months' expenditure. So when you're coming to apply for a mortgage, remember exactly how your bank statements may look to a third party. Outstanding debts, another interesting one. So what I mean by pay off outstanding debts is, if you've got thousands in the bank because you're about to buy a house, but you can't quite borrow enough, or the interest rate that you get may be a little bit prohibitive, one of the key things you need to be looking at is also what your monthly budget could look like going forward. What is your household income going forward? If you cannot afford to pay off loans or interest-free credit, or credit card debts are about to come off their 0% deals, pay them off. What you don't want to be doing is paying money in interest where you don't need to. I'll give you another example of where this can impact your borrowing as well. We had a lady who had a monthly loan payment of £450, just under £450 going out to Lloyds. She had about £2,000 owing on this, which was about 5 or 6 payments left. So we advised her to use some of her deposit money to pay off that loan, because that £450 that she's now got in disposable income would have resulted in a further £29,000 of borrowing. And she needed about another 19,000, and she didn't realise the impact was so high of a personal loan. So review how much you've got owing. If you can pay it off, pay it off. Improve your credit score by getting a credit card and registering to vote. So it sounds a bit crazy when I've just told you to pay off debts, when I'm telling you the very next breath to get a credit card. But the purpose for getting a credit card is to make sure that you've got an active credit account on your credit report, on your credit history. So when a lender does a credit check on you, they can see that you do have other credit. It's not just the mortgage that's going to be the first bit of credit you ever have. There are examples of other things that are on your credit history. So the key thing here is to make sure you've got some kind of credit history. Spend on the credit card, maybe put your petrol on it or your groceries on it, but pay it off, and pay it off before the interest accrues. And if you do that for about 6 months or 12 months, it will help you to build your credit score. Registering to vote is quite an important one. If you can vote, if you do have if you're allowed to vote, get onto the electoral register and make sure that the local authority has you registered, because that again improves your credit score. The other things that you can do, whether you're eligible to vote or not, are things like making sure utility bills are registered in your name. And if there's 2 of you applying for a mortgage, make sure everything is not just registered in one person's name. Register them jointly, or have half and half, so both of your credit reports improve. So that is improving credit. Taking out a longer mortgage term, we've already spoken about this. This is one of the things we're doing naturally anyway. But if you're thinking of moving and you're thinking, right, I want to get rid of this next mortgage in 20 years, just think about it pragmatically. We do have high interest rates at the moment. So it's a really, really good idea to actually make your first mortgage payment or your next mortgage payment affordable, and make sure it's as low as it can be. We do still have high food prices, high energy costs. So it's a good idea to make the mortgage payment, fix it, if that's the most appropriate thing for your budget, and then also take the mortgage out over a longer period of time to make sure there is some disposable income that you have. You can always take out the mortgage over a longer period of time and do regular overpayments to make the debt come down a little bit quicker. We can talk to you about that in more detail. The other thing, a difficult conversation, which is why it's the last one in the list, is we are actually having frank conversations with people at the moment and saying, you can't really afford to buy in this area if that's your monthly budget. You need to actually look a little bit further afield. This is especially a problem in London and in the southeast. People are having to move out of the areas that they know and where they want to live because the properties are too expensive. So be realistic as well, given where we are. Next slide, please. So if you're a property investor, back to the landlords again. This goes for anyone really, but especially with landlords, negotiate really hard if you are buying a property. Broaden your search area. As I said before, this one is a bit easier for landlords than if you're moving, because you're not going to be living in the investment property you're looking to buy. So don't be too picky about the area. Consider creating value rather than buying it. So what a lot of our professional landlords are doing at the moment is they are looking at opportunities to create value. Things like extending the property. So you've got more sort of living area, which means you can charge a higher rent. Changing the usage of the property. There's a lot of commercial units out there at the moment, like shops, maybe sort of former guest houses, things like that. where people are applying to the council, they're buying the properties, applying to the council to change the usage to residential from commercial, and they're getting a bit of a deal there. And they can create value just by becoming residential in the right area. They tend to be bigger properties as well. Refurbishment projects are really, really popular ones. So buying old, tired properties that need double glazing, that need heating installed, boiler installed, kitchen, bathroom. The project can be as big or as small as you want to take on. But from day one, you can create value if you get the right project at the right time. Some of these refurbishment projects are ending up at auction, which is the next one. Auctions and distress sales where people are desperate to sell quickly. There are also scenarios where we can potentially create value from day one and get properties that are below market value. Changing tenant types. This is quite an interesting one, and it's growing quite a bit, particularly Airbnb. So rather than letting the property to a family or to a couple or to professionals, properties being let to students, room by room, properties being let like serviced accommodation, like Airbnb, like I mentioned, which basically means you have much, much higher rents because more of the property is being used to individuals. There's higher changeovers as well. So these are all ways in which you can create value. These are all the things that some of our professional landlords are looking at the moment who are really, really active. So definitely a good idea to look at these sort of opportunities. Staying on top of lending policy via your broker is quite an important one for buy-to-let. So the buy-to-let market has changed so much, even in the last 6 months, in terms of lenders that have entered and exited the market, lenders who now know that they can't compete on rates, so they're trying to do more flexible criteria. So Airbnb, for example, it was really difficult to get a mortgage on that about 6 months ago. There's more lenders now who are willing to do it. So stay on top of lending policy, stay in touch with your broker. I have texts and emails regularly about specific property projects that our landlords are looking to buy. And we're more than happy to give you sort of bespoke feedback on each individual property. I know there's some questions as well. I'll try to answer some questions at the end if there's time. If not, then we will try to send out some kind of messaging to let you know the answers to your questions, but do feel free to ask. Next slide, please, George. So just to recap, if you are remortgaging, you are going to be in a world of pain if you don't act early. Waiting will cost you a lot of money. Mortgage rates change massively in a short period of time. It's okay to extend your mortgage term temporarily. And when I say temporarily, we need to keep an eye on the interest rates. When the rates start to come down again, I mean, it's anybody's guess. If I had a crystal ball, I'd love to tell you. But at the moment, lenders seem to think that the interest rates aren't going to come back down to what we call cheap levels for at least 2 to 3 years. So a lot of people, because of that, they're going for 3 years or 5 years on fixed deals. But when those deals come to an end, you can always reduce your mortgage term again. You don't have to keep it where it is because of the market today. The other thing that you can do as well is if you have done a temporary move to interest only, consider it temporary. You do need to switch back to repayment when you can. And not all lenders will do interest only. So, again, it's only designed as a temporary option. We wouldn't recommend you do it long-term for your residential mortgage. And always understand how the current lender compares with the market. Don't just switch to an average deal because you left it too late. Even if you've left it too late, speak with a broker. They can look at your current lender and the market. And then if there's time to switch to another lender, we can pick quicker lenders who may not have the best rate in the market, but is better than what your current lender offers. Always speak with us. Next slide, please. So this is a really, really common question that we're getting. Have a think about the amount of times you've heard that property prices are going to crash in the last few weeks because the interest rates keep going up. The property prices have actually started to hit the news as well now because we've had, I think, the third consecutive month of small decreases according to the top two lenders in the UK and the house pricing indexes that they use. So is now a good time to buy? Let's try to answer that for you. Let's break it down. Next slide, please. So everybody appreciates that a deposit is really, really hard to save at the moment because of property prices being what they are over the past few years. That's not a new problem. That's been going on for the last 5 years at least. You need a minimum deposit of 5% with most lenders if you're looking to buy, to live in. There's one lender who can actually move forward with a zero deposit. There's 100% mortgage available out there. There's only one at the moment. It's a really, really clever and innovative product because the way they try to manage the risk as a lender is they want evidence that you've been paying rent that's comparable to the new mortgage payment that you're looking to take out. So if the rent is a similar value to the new mortgage payment that you're looking to take out, they will consider you. That's one of their criteria points. There's quite a few others around affordability. That's one of the key ones that relates to 100% mortgages. So there is one option out there for no deposits for first-time buyers. So if you have a deposit and you're renting as a first-time buyer, negotiate hard on the price. Don't sit there and rent. So remember, the question we're trying to answer is now a good time to buy? Is now a good time to pay your landlord's mortgage? Would be the question that I would put back to you, because their mortgage is going higher and higher. You're going to be under pressure to increase your rent at some point. And even if that doesn't happen, the rent that you're paying is dead money. So if you've got a deposit, try to buy now rather than waiting, because you're just wasting money every month. You may as well put that into your own mortgage. So even if property prices dip over the coming months, so property prices coming down, common thing on the news, like I said, if you strike a good deal right at the start, because you're a first-time buyer, you've got nothing to sell and your mortgage is pre-agreed, you will end up not being hit so hard by any small decreases in the property prices. Now, property prices are variable depending on where you are in the country. Some areas are going to fall quicker than others, depending on what's happened in the previous years. But the key thing is, over the medium term, in most areas, prices will double. And the medium term means sort of 7 to 10 years, prices have doubled historically, if you look at the national average. So when is it a good time to buy? Now is a good time to buy for a first-time buyer, particularly if you're renting. If you're living with mum and dad, you may just need to save for a bit longer. But if you're renting, definitely do something. Next slide, please. So if you're not a first-time buyer, if you've already got a mortgage and you're looking to sell and buy, is it a good time to buy? Well, if you are upsizing, so if you're selling a property at a cheaper price than what you're buying, so you're buying a more expensive home, which I think is most people out there that we speak with, you may just want to watch the prices in the area where you're looking to sell and the area where you're looking to buy, just to understand what is happening in those individual markets before you actually put your house on the market. Speak with estate agents. Don't just speak with one. Get a balanced view. So if you're getting your property valued, get at least 3 out there to try to get a balanced view of what their opinion is on the market. Don't offer too many opinions yourself. Just listen and see where the common thread is in terms of what they're saying. And then when you're looking to buy as well, at the same time, if you're upsizing, also ask about the market where you're looking to buy, if they know. If you're downsizing, do it now. If the property market is about to drop a little bit, it's already started dropping a little bit if you look at certain areas, now is the time to sell. You've got a more expensive asset that you're selling in order to buy something cheaper. You want to get a top price for the asset that you're selling. So do it now to take advantage of the market. So that's the second point, really, really important one. In terms of number 3, sometimes there's no right or wrong in terms of when you should buy. A lot of families we speak with, they're trying to get their children into certain catchment areas for schools. They have a deadline. If you need to be in a school catchment area for September, you normally need to provide evidence at least a month or 2 beforehand that you moved into the area. So, time pressures do dictate that this summer is going to be really, really important for families who are moving for schooling reasons. There's also work relocations that people have to do. So, you may be spending a lot of money on travel. You may have to be relocated. It may be too expensive where you live. There's never a right time if it's due to work. You just have to go with circumstances that you're faced with. The key thing is plan early, speak with a mortgage broker, first and foremost, understand what numbers you need to hit on the sale and on the purchase, work out what's realistic, get your property valued, and get to know your maximum purchase price. Whatever the limits are that you're faced with, stick to the limits. Don't get tempted to spend more than you need to. It's a really good piece of advice at the moment is not to overextend yourselves and borrowing where you don't need to. Next slide, please. So if you're a property investor, we find that most of the professional landlords, these are the people who do it for a living. They don't have other job properties. They're bread and butter. These guys are becoming more and more active because they see opportunities in the property market. These are some of the key opportunities that they are seeing. This is probably a summary of what I hear from my most active property investors. So what they're saying at the moment is in certain areas, there is a significant shortage of rental stock. I'd actually go as far as to say in most areas now, there is a significant shortage of good quality rental property. And as a result of that, rents have been rising because there's more demand for the good stuff that's out there. So because there's a big demand for higher rents, it becomes more attractive despite the high interest rates. When the market is slow, there are opportunities to pick up really good below market value properties, to pick up a bargain. And these are the things that can really create property wealth going forward. One of those things, this is the third point, is landlords, smaller landlords exiting the market, or even professional landlords selling some of their stock because it hasn't performed as well as they expected. So when a landlord gets desperate to sell because their cash flow isn't working, they may be willing to accept a really, really cheap price. And the ones that we're seeing quite a lot on the market at the moment that some of our larger landlords are acting on are small landlords exiting the market and selling their properties with their existing tenants in place. That is what you call a turnkey investment. So you open the door, and what you've got straight away is tenants in there who are already paying rent from day one. So you don't end up with any period without rent. From the day of completion, you've got rent rolling in. These are quite popular at the minute. Next slide, please. So, an overall summary of what I've just said to you guys in terms of the key things to act on. So these are the key aims that we're looking to for you guys to understand. Don't wait. You'll pay more if you wait with your current mortgage. Act as early as you can. We can't really act any earlier than about 7 months before your deal's due to expire. But the sooner you know when your current deal's due to expire, the better. But then act on it as well. Engage with a professional broker who's got whole of market access. Whole of market access means you will end up with the best deal that you can qualify for based on your circumstances and available lending criteria. If the two things match, you'll get the best deal. So engage someone who's a professional as well. Keep your finances tidy. Do not miss payments. Anything like credit cards, make sure you've got the minimum payment on direct debit, so you're not having to remember to make your minimum payment. Things like utility bills. If you end up in a bit of a dispute with British Gas or anybody like that, make sure that what they're asking for, you do pay, then you dispute it with them. They will register a county court judgment or a default on your account. They do that at the drop of a hat. Utility suppliers, mobile phone suppliers, and also credit card companies. They're notorious for ruining people's credit files for one tiny little thing. If it's a dispute, pay it and then argue with them. Reduce debts and maximize your income. And these are the things that we've talked about already: reducing your unsecured debts, overpaying on your mortgage, maximizing your income by looking at any additional income streams you can bring in alongside your core income. These are all really, really important. Next slide, please. So next steps from here. So this is what we're asking you to act on. So number one, speak with your Genistar representative about having a mortgage consultation with Smarter Finance. I deal with most of the inquiries that come in because of my relationship with Genistar. So if you do have any questions, any queries, if you want to review your mortgage situation, then reach out to the person who asked you to attend today, and they will be able to qualify your situation to see whether it's a good time for us to speak. And if it is, they will refer you over to us and we will book an appointment to speak with you. Our consultations are free. Genistar can help you to maximize your income. We deal with a lot of Genistar representatives who actually have their main job and they will have additional income coming through from Genistar. We can use the additional income as well to supplement your income when we're looking at affordability and what you can borrow. More importantly, it allows you to save a deposit more quickly and also overpay on existing mortgages. So a very, very good thing to do. That's it from me for this evening. I'd just like to say thank you so much for listening to me and giving me your valuable time. I hope you found it informative. I've certainly enjoyed giving some of these tactics to you guys. So thank you all for listening. Thank you for attending. I'll now hand back to you, Jeff.
Great. Thank you so much, Taj. What a great seminar. And, I've got a couple of pages of notes, and I've been in financial services for almost 5 decades. But, when I hear what you're teaching, because it's a changing market. And obviously there were loads of questions that came on, almost 50 questions. We had almost 700 people on the call tonight, had over 1,000 registered. And so a couple of things. Number one, if you do have a question, please post them in the Q&A section. We're just not going to have time to cover them here this evening. However, Taj has been kind enough to agree to take the time. Obviously, some of the questions are, repetitive or similar, or you ask them and Taj already answered the question. Like one person said, is now a good time to buy property? And Taj obviously covered that in the seminar. So if you want to post your questions in there, and then Taj will we'll put those together. We'll collate them within the next, well, certainly by the end of the week. I hope, Taj, that isn't putting too much pressure on you.
Absolutely
And
fine.
then, okay, and then so we'll send you out the questions, the answers, plus a link. We'll have a YouTube link that will be a public YouTube link. You can share it with family, friends. And of course, you can review it again because it was a lot of information. It's a little bit like trying to get a drink out of a fire hydrant. And, but it was great information. So thanks again, Taj. So Steve Jenkins, are you with us?
Yes, sir.
Hey, Steve. Good to see you here this evening. And Steve, thank you so much for your commitment to really helping to deliver the concept of financial freedom to all here in the United Kingdom and pretty soon globally. And so, Steve, I'm going to turn the session over to you. Thank you.
Well, thank you, Jeff, and thank you, Taj. That was outstanding information there. And I'm here to really kind of just give you an alternative solution. We have in Genistar thousands of people across the United Kingdom working with us part-time. They come from backgrounds like nursing and teaching, care workers, social workers. Very few of us have got a financial background. And as you can see by the photographs on the screen there, we come from all around the world. We're represented in Genistar in more than 80 nationalities. And we're just looking for more like-minded people to come on board and teach this financial education. And wow, is now the time more so than ever I've seen before in my career with Genistar and within the financial industry, because obviously the mortgage and cost of living crisis is requiring people to have extra income. There's never been a need like right now than to earn extra income. And we're looking for people to come and work with us part-time, just one, maybe 2 evenings a week, typically earning between £1,000 and £2,000 a month, teaching a financial education program that we train people to deliver. So, George, if you can go to the next slide. Okay, so we're going to give you this evening for attending a free copy of what I believe is the best book ever written on finance for the family. Obviously, I'm a bit biased. My CEO, Jeff, who you just heard from, wrote it. But the reason I can claim that it's the best book written for the family is that it's written in plain English. It's around 60 pages long. It's written in a magazine kind of style, very easy to grasp. And hey, if you've got teenage children, it's a great read for them so that they don't kind of carry on our generation of culture of having lots and lots of debt. This will give them the information that'll get them thinking differently about their money, which leads them on to making better choices, which means they end up in a far better place. So make sure you speak to your Genistar representative and ask them to email into your inbox a PDF version of this. It's a fantastic read and literally changes people's lives. George, next page, please. Now, if you've had your interest piqued and you'd like to find out more, next Monday we have 5 venues where we're going to be holding something called a business overview, which kind of covers a little bit more about who we are, what we do, how we do it, and most importantly, what's in it for you guys. All of them start at 7:30 in the evening. Maybe you need to write that down, 7:30 in the evening. And on the Monday, the 24th, they will be in London, Sheffield, Leeds, Portsmouth, and Birmingham. And on the Tuesday, the 25th, they will also be held in Manchester and Cardiff. So that's a big chunk of the country that's covered, where we're for 1 hour going to be meeting people in person, inviting you to come and take a look. And to get your ticket, because tickets will be gone quickly, they won't last till the end of the week, just get your phone and hover it over that scan QR code now. In fact, I'd encourage you to do it right now. Just put your phone over that QR code, and it will take you through to a link to register yourself. It's free. There's no cost. Just register yourself as a guest, as a ticket. Put down the name of the person who invited you, and speak to the person who invited you and ask who their executive vice president is. That's their kind of full-time franchise that they're part of. and get yourself registered. I booked myself onto something very similar over 16 years ago now, and I actually reluctantly went along. I wasn't really interested, but by the end of the presentation, my thoughts and my feelings changed completely, and it's changed my life, it's changed my family's life, and it's the best decision that I've ever made. So get yourself along. Worst case scenario is you're going to learn a heck of a lot, not just about mortgages, about investments and all the other parts of the financial industry that, frankly, they just don't teach at school. And so they should. 14,000 hours, and we learn nothing about money and finance. And you'll get kind of a start on a financial education journey that we hope to help you with for many years to come. So get yourself along and come and see us, come and meet us in person and find out more about how you could have a part-time opportunity inside Genistar, earning an extra $1 or $2 grand a month, just 1 or 2 evenings a week. But who knows, you might fall in love with it and it could turn into a full-blown career like many of us have now taken on board. So get yourself booked. Okay, George, final slide. Maybe you're in the right place at the right time, and maybe this evening it's the right time to take action. Just book yourself in with the person who invited you, and they will refer you to Smarter Finance. We give away a piece of software called a financial game plan, which is like a sat nav for your finances. We're talking about mortgages. So, for example, with your mortgage, you'll be able to see the exact date your mortgage is paid off, how much interest you're going to pay on that mortgage over the lifetime of the loan. You'll then see something called biweekly payments and overpayments, and how you can actually get rid of it quicker and knock years and years and years off the mortgage and any other debts you've got for that matter, and much more. So book yourself for the meeting next week, but also book yourself in for a free financial review and get that tool called your financial game plan, which the rest of the industry charges between £1,000 and £3,000 for. We're giving it away free for those of you who've registered this evening. So get that booked in with the person who invited you here this evening and literally change your financial future. That's all from me, Jeff, and pass it back to you to finish it off.
Great. Thank you, Steve. And, again, thank you, Taj, from Genistar as well as Smarter Finance. Thank you all for joining us here this evening. George, if we could just take the presentation down, just put me up here. I just kind of want to chat with everybody just for a moment and just kind of, first of all, thank you to everybody for attending. This seminar that Steve spoke about, I first saw that in America 42 years ago. I was 24 years old, broke, and came to work with the company in the U.S. It's a different name in the U.S. And within just a matter of a couple of months, I was making a couple thousand a month part-time. It just changed my life. And Steve, as you were talking, I was thinking about our top part-timer last month is a nurse down near Portsmouth by the name of Evelyn Cunanan. I wish I had her on here tonight. Last month, part-time, so she's a full-time nurse. Last month, Steve, she made over £9,000 in the month, which is amazing. I mean, that's, 2.5 times what she normally makes as a nurse. And, so it's pretty exciting. She's going to end up making more this year part-time with us than at her full-time job as a nurse at the NHS. So that's pretty exciting. I did want to just mention one thing, and that is that obviously all of you had loads of questions. And, the best way to get your individual questions answered, as Steve mentioned, is get together with your Genistar representative, do this financial game plan, because it will really kind of gives you the whole picture where you're at financially. As Steve mentioned, it, we do it free of charge. It's pretty amazing. And then when they refer you to Taj, he'll already have all of your information. It'll save him time, you time, and he'll really be able to tell you a lot just from your financial game plan as far as kind of an overall picture. So that'll be very helpful to you. There was another question. How do you get the book that Steve mentioned? Make sure you talk to your Genistar representative. Now, this particular seminar was the first one that we've done like this. And so many of our people put it out on social media, okay? And so there will be people maybe that don't have a Genistar representative, or we did a mailing to all of our clients, and maybe your representative was from 16 years ago. By the way, today is Genistar's birthday. Today, 16 years ago, is when we founded Genistar here in the United Kingdom. So happy birthday to Genistar, going into our 17th year. And so if you don't have a Genistar representative, I've asked Unita, my assistant, to put her email address in the chat box there. And we'll also send out the email in our follow-up email that we'll be sending to you with all the questions, the answers, as well as the link to the seminar. We'll have an email address in there for you. So if you do not have a Genistar rep, you heard about it on Eventbrite or whatever it might be, okay, we want to track down who invited you, where it came from, because we want to honor them as far as them being able to do the follow-up with you. But if for some reason, you just don't know who invited you, email Unita and we'll help you kind of track that person down or link you up with a representative in your area. Okay. So listen, thanks again for joining us tonight. Thank you again, Taj. Thank you, Steve, for your input this evening. Great job. And thank you to every single one of you. We had right at 700 people that actually attended the live session tonight. That's just on Zoom, plus several hundred other people that actually joined us on the Genistar members Facebook page. So thanks again for joining us. We're wrapping this up right now, and have a lovely evening. Thank you. Bye-bye.